business this afternoon. My name is Alfred Okansi. To our first story, the Energy Commission wants a swift move from CFL to LED bulbs to conserve energy. The Commission says this will save Ghana close to 100 megawatts if every household across the country makes the switch.
Ghana conducted a similar exercise in 2007, which saw a shift in the use of incandescent bulbs to the compact fluorescent lighting (CFL). This was reported to have saved the country 124 megawatts. Ghana is emerging from a more than 3-year power crisis, which collapsed some businesses and led to a number of workers being laid off. The Energy Commission says businesses as well as households have the opportunity to slash their power consumption in respect of lighting by half if they switch to LEDs.
It is being discussed by government to accelerate that process. It needs to be done. Looking at the power challenges that we are facing, and looking at the fact that electricity tariffs are not going to go down in the near future.
The head of Energy Efficiency and Climate Change Division at the Energy Commission, Kofi Ejakon, said the bulbs have a 10-year lifespan and are durable.
LEDs are expensive than CFL because the technologies are different. This one, compared to LED, is very robust. This has long lifespan than CFL. It is mercury free. Unlike the CFL, this one does not contain mercury, and it is off-grid compliant.
Now, finance officials from Ghana will be meeting investors in London and New York this week ahead of the likely launch of a new Eurobond. Finance Minister Setekpa told Reuters last week the government plans to use the meetings to showcase the turnaround of the economy and its medium-term potential. The meetings will also be used to assess market conditions ahead of a bond launch. There's more in this Business Desk report.
Ghana is currently under a 3-year deal with International Monetary Fund to repair the economy, which has been saddled with a high budget deficit, public debt, and inflation consistently above government targets. But Finance Minister Setekpa says he expects a more favorable market condition this year based on improvement in the Ghanaian economy, especially the potential of the energy sector. But some analysts believe that considering the lower commodity prices, the risk of adverse shocks to economic fundamentals are higher, and this would compel foreign investors to either lighten their portfolio holdings or demand significant risk premiums. The country issued a 15-year $1 billion Eurobond in October with a yield of 10.75% after having first targeted a $1.5 billion bond at 9.5%. It was a fourth sale since its 2007 debut. Parliament in December approved the government's plan to issue a fifth Eurobond of up to $1 billion to refinance debts and support its 2016 budget.
That's it for business this afternoon. We'll go for a quick break. We're back with some sports news. My name is Alfred Okansi.